With the cryptocurrency bear market in full swing, I'm sure as a typical investor, you're worried or you're asking, when should I buy? Hi, my name is Prince Wanda, MD Wonderful. During the bear market, we tend to see a lot of market dips. The market consistently continues to drop, and we tend to worry, tend to ask, when should I buy? Because everything looks so insanely cheap that we tend to, we're conflicted as to what price we should be buying at. So that's what I'm going to be putting you through during this video. I'm going to be explaining to you the best investment strategy to use in the bear market. I've tested it, I've used it, and it has worked out for me. So I'm going to be pushing that to you so you can make the most of it as well and make the best out of the bear market. As you know, during the bear market, we have the best insane prices. We can get the best coins with the best fundamentals at really cheap prices, and we can make the most of the bull market when it eventually returns. Major problem when investing in the bear market is we tend to see lower lows, right? And then a lot of the coins, a lot of the stocks, a lot of the projects that tend to be hyperactive during the bull market tend not to survive the bear market. So we are worried, in as much as this asset is cheap, will it actually give us profit back at the end of the day? So besides doing our research, how do we reduce the risk of buying at too high a price, or risk waiting for the market bottom and then missing out on the entire bear market opportunity to stack up these currencies, these assets at really cheap prices? Which is why I'm going to be introducing you to the dollar cost average, for short, DCA. DCA is simply an investment strategy that allows you, or that you enter the market at different prices over an extended period of time. Take, for example, you want to invest $1,000 into the market. So you're going in, okay, you want to invest $1,000 into the market over the space of, say, 10 months. So that's $100 every month, regardless of the market price, right? So this month you put in $100, the next month you put in another $100, and then $100, and then another $100 for 10 months consecutively. So at the end of the day, you take all the prices you bought $100 at, and then you divide it by the amount of times you bought, and then you get the average amount that you invested. Okay, so that's dollar cost average. So we're going to be applying this to investing in cryptocurrencies during this bear market. Say we want to invest in KuCoin shares, for example. KCS has been proven over time to be a really stable asset, and it gives a good return on investment during the bull market. And considering the KuCoin exchange is actually one of the top best exchanges in the cryptocurrency market, its token can only do better, right? So we've established that it's fundamentally strong. Now we want to get in at the best prices, but we don't really know where the bottom is going to be. We've been estimating Bitcoin is going to drop to 13k, 10k. We don't really know for sure, right? So we want to be buying bits and pieces little by little as the market drops. Now, the benefit of DCA, especially in a bear market, is that we have a much higher chance of the market making lower lows, right? So we're mostly going to be buying at lower and lower and lower and lower prices over time. Now, another advantage of DCA is you don't get to miss out on the trend should the market start to reverse before you finish stacking up your positions. So you could buy, and then when the market starts to go back up, you could also be buying at much higher prices. But at the end of the day, knowing how the crypto bull market works, we're actually still going to make a lot of profit at the end of the day. So the idea for using DCA during the bear market is to buy at lower and lower and lower prices, so we don't just buy in all at once. Another advantage of DCA is psychological impact. Yeah. Normally, if you just go in with a chunk of money all at once during the bear market, you're going to be skeptical, you're going to be scared, because as the market continues to make lower lows, you're going to be increasingly tense as to how the market is going to react. Is your asset going to survive? How long is this going to take? But if you inject little chunks of money into the market over time, you're more relaxed and less likely to run out of your position before it matures. Okay, so DCA has a lot of advantages, but as well there are also disadvantages, but this really doesn't apply much to the bear market, which is where I'm advising you use DCA the most. Okay, so when you're investing in a bull market using DCA, you're mostly going to be buying at much higher and higher prices. Now the market has to keep going higher in order for you to make a profit, which really isn't the best strategy in that particular situation. In a bull market, it's better to buy a huge chunk at once than to DCA in. DCA works well if you're buying at low prices every time you come into the market. Okay, now one other thing with DCA that I'd really advise you to look into is the fact that you don't have to tie down all your money at once. Okay, especially since we're in the bear market, you really don't just want to invest all your money all at once and then wait for, say, a year, 18 months, 2-3 years in order for all that to mature. Okay, so you could break it down to little bits and then push that into the market, and so the waiting time doesn't actually seem as long because you didn't put all that money into the market at the same time. You put bits and pieces of it into the market, so it makes it a lot easier for you to go through the process of investing. But from my own personal experience and from those of my students and people I've mentored and coached, I've noticed that they have a problem with holding long-term positions, mostly because the sum invested wasn't actually convenient, or they really couldn't hold such a large position for an extended period of time. Yeah, that's one of the problems with investing. And because when you invest, you could still see a 50% pullback on your investment, especially in a bear market. So there's always this fear factor that comes in. But with DCA, you pretty much eliminate the possibility of that happening. Okay, so should this market actually even start to go against you, you could still just buy lower, and seeing as your position sizes each time is actually smaller, and the lower the market goes, the lower you buy. At the end of the day, you end up with a much favorable price, and when the bull market comes, you're making a hell of a lot of money, return on investment on your entries. Okay, so you should really consider DCA as a strategy to make the most out of the crypto bear market. Invest wisely, invest what you can afford to lose. See you on our next video. Hello, you've reached the end of this video. I'm sure you gained tremendous value from that tutorial video, so I urge you to click the subscribe button and also turn on the notifications so that you will be notified whenever we upload a hot new video.